What's up, y'all? It's Myles the Millennial.
And it's your boy Rex Howard Jr.
And this is Let's Talk Like Men, the podcast where we have real conversations providing real advice to real men like you everywhere. And we're back today with another episode. How are you doing, Rex?
Man, I'm blessed and highly favored. Can't complain. Got a big weekend coming up.
Yeah, you do, man. Is this episode, when is this episode's coming out Friday? So we're going to be quiet for now.
Be quiet, yeah.
All right, cool. I just had a big weekend for myself. I just came back from Nashville last night celebrating 5 years with my girlfriend.
That's
so
amazing.
Super excited for the continued success that we're having in our relationship. And we're excited to be back here today to talk about part 2 of our financial education series, our financial boot camp. So our first episode, we discussed personal finance and budgeting, right? We had our boy Kechi on, and it was a great conversation as a finance coach talking to people about how they can use their money to further their investments, further their life, and prepare themselves for the future.
Absolutely.
Well, today, we're going to have a little bit different of a conversation. We're going to talk about a different aspect of money and finances and how, if you're in America, money really works, and that is credit. So we have 2 lovely guests here today. We're going to let them introduce themselves in just a second, but we're going to use today to talk about credit education on both ends. So first, on how to build your credit properly, and then if you do have some missteps along the way, how you can repair it. So we're going to let our guests introduce themselves. LaLover, I want you to go first.
Hello, everyone. My name is LaLover Horace, and I love everything about credit. Thank you guys for having me,
Absolutely.
and I'm excited to be here.
Absolutely. All right, Lamarr.
All right, you guys. How y'all doing? I'm Lamarr Nash. I represent IIY Consulting, a credit restoration firm. I've been in banking and investments for about 8 years, and as she said, I love everything about credit.
Absolutely.
Everything about credit, for real.
This is perfect. We have 2 people that are truly in love with credit, truly in love with the topic we're going to be discussing. So I look forward to the conversation that we're about to have. So Rex, without further ado, let's talk like men.
Yes,
all right,
sir.
cool. So we always like to kick off every single one of our episodes with a hot topic. So we're going to hit you guys with something off the wall that you guys aren't prepared for, and we want to get your opinion on it.
Oh, man.
So
all right.
the hot topic of today is, I see this happen a lot on social media where they talk about like first questions when dating. You're going on your first date. What should you be talking about? What's mandatory? What's important? Okay. Now, I've seen some people bring up, I need to know your credit score. On the spot, like when we're dating, we're on that first date or 2. I need to know what your credit score is. I want to ask you guys, is that a proper first date question out of the importance of getting to know somebody? And 2, what does a person's credit tell you if you're dating, married, whatever? What does that tell you about that person?
Oh, that's tough.
Hey, I'm going to listen to a woman's perspective.
You want me to go first? Okay, so if I'm being very honest and transparent, on the first date for me, no.
Okay.
I don't want to do anything too prematurely.
Yeah.
We're at hello.
Yeah.
I may or may not want to see you again after today.
Absolutely.
So I don't need to know all those juicy details about you. Not at that point.
Yep. That's real. So what would you say, when would a good point be to have that conversation, and why is it important to know a person's credit?
It's important to know the credit because for me, the definition of credit is summed up in one word: integrity.
That's good.
That's my personal definition of credit.
I like that.
So it's important for me to know that. But I don't need to know that until we are really getting serious.
I like that.
I completely agree with that sentiment. For me, I think of credit as reputation. So it kind of goes hand in hand with that. If you're not willing to take care of your reputation or your bills, then it's a little tough for me to trust that you're going to be able to hold down our family, you know?
Are you asking on the first date, Lamarr?
Of course not. Of course not. We're going to have to get to know each other really, really in-depthly. And then I literally have to think like, okay, this is someone I may want to spend the rest of my life with. And then we have those type of conversations.
Absolutely.
Yeah.
Can I add one more thing to that?
Yeah, go ahead.
So if it comes up, say he brings it up. I'm not bringing it up.
Yeah.
But if he brings it up,
Yeah.
I'm not ducking and dodging. We're going in.
Absolutely.
And we're going to have that
And you're
conversation.
you're gonna ask him back at that point, right? If he asks you.
Absolutely, I will. But I'm not the one bringing it up.
I like that. Okay. Rex, what you think about that? Should we be asking questions about money and stuff like that on the first date, brother?
Man, money conversation and credit conversation, I think, are 2 different. I personally have dated, and I've never had the credit conversation on the first couple dates. Like the lady I'm with now, we didn't have the credit conversation until we was a few months in.
Yeah.
But I think it just depends on where you are in life, where you are with your money and finances, and where you are with your career. And if you were big in investing and big in saving and big in putting your money in different places, I think those are conversations that you have.
Absolutely.
Because it's important.
I love it. I love it. I mean, I feel very similar. To your point, LaLover, when I see a real future here, right? We've had enough dates, we've been around each other enough, and we're talking about, okay, well, what does the future look like together? Well, the future is going to definitely involve what your credit and our finances and whatnot, how that's going to look. Because if we plan on getting married, all those things are going to be connected in one form or another. So it's definitely important to have those conversations when you're with somebody, but hold off until you have a little bit more connection with them, because you're going to push them away if you get too touchy on that.
Facts.
I like that.
Facts.
All right. So anybody have anything else they want to add to that hot topic? Perfect. All right. So we're going to move on to our main topic of the day, which is credit education. So like we said, this is part 2 of our financial bootcamp series. So we're going to talk about credit building and we're going to talk about credit repair. Lover is going to be representing the credit building, how you get it together from the start. And then Lamarr is going to represent credit repair. So if you do mess up or you have some things that you don't like on there, you want to get it back in order, the steps that you can take. So our first question, Rex, do you want to take the first question?
Yes, sir. So the question I have you guys is having credit important or mandatory? And if so, why?
I'm going to let you take this one first.
I say absolutely. It's absolutely important. Why? Cash is king, but really credit is queen.
Okay.
And when you're playing chess, where is the king without his queen?
Absolutely.
He's laying face down.
Yeah.
And if you guys look at the market and the way things are going today, credit is to be used for leverage, not for needs. It's not a gap filter. You have more month at the end of your money. That is not where credit comes in.
Yeah.
Credit, you should use it from a place of strength, not a place of weakness.
I like that.
Exactly.
That's good.
I completely concur with that point. I really believe that the leverage is the key point here, right? So you want to use your assets as your base, use the credit as your leverage to be able to grow the assets that you have, or, have a little fun, but make sure you're doing it responsibly.
Absolutely.
Yeah.
So how do y'all feel about like Afterpay, Klarna, different things that have popped up recently where people are able to borrow money, right? No interest for a while or no payments due for a while for things that they want, right? They want to buy an outfit online and it costs $100. And instead of spending the $100 in their bank account, they want to spend the $100 on Afterpay. How do you guys feel about that?
I could take this one first.
Yes.
Good. I feel like you got something to say a little bit deeper than that. But what I would say is if it's in your budget, and this comes down to just a pure financial education conversation, you should always have a budget that you maintaining as well as keeping track of, right? So if it's in your budget and you can fit in those type of payments, do so, but please do so responsibly and pay attention to the APR on those, man. They be like 25% that you're paying for like 3 months, not knowing that you're almost paying a quarter of the product price that you just purchased. So that's my point on it.
I'm a little bit more strict.
Okay.
If you don't have it, you can't afford it. You can't get it.
Yeah.
It's pure point blank in the story.
Yeah.
If I'm using my credit card, it's because I already have the money to pay it in full. So I'm going to say X-nay on that. That's a negative no for me.
Yeah.
Don't do it.
I like that. Rex, you have an opinion on that?
Yeah, you know what I'm saying? I think for me though, it stems from a complete poor financial literacy though. Right? Growing up, I remember, seeing the phone calls from, some of my parents' phones that used to be the 888 number, the collection number, right? And I used to hear, don't worry about that number, just ignore it, just ignore it, right? And then you see a pile of credit cards, or, we'll go to Marshall's or go to Ross, and there's a credit card for every store in TJ Maxx. And so that's what I learned, and that's what I seen growing up. So I didn't feel like it was ever a problem to do something on Afterpay, especially when it became an option. I'm like, man, this is dope. Yeah, I don't got to pay for it now, right? But I have realized and I have learned that it puts you in a bind when you don't have it.
Yeah.
When you don't, it feels good to get that product, of course, but it doesn't feel good to get that phone call. It doesn't feel good when they want to withdraw from your account automatically and there's nothing there. So, yeah, it can definitely put you in a bind. So I take the stance that you just said. If you don't have it, don't do it.
And can I add a little bit to that?
Absolutely.
It's not because I never been there, did that, and done that.
Yeah.
It's because I have that I can speak on
Absolutely.
it. So I, at one point, was in consumer credit card debt.
Mm-hmm.
And it wasn't I'm not gonna say insurmountable, but it wasn't like a whole lot.
Yeah.
But in your early 20s,
It was a lot.
and you owe $2,000,
Yeah, that means
and
something.
you don't make that much dollars,
Yeah.
it's a whole lot.
Yeah.
So I understood once I started researching and learning the debt snowball method, the avalanche method.
That's good.
Dave Ramsey, I'm giving you a plug.
Yeah.
Following those steps. So I can say today,
Yeah.
if I swipe my card, it's because I'm paying it off in full. And I don't want to go ahead of where we're going to go with the whole
Absolutely, 'cause
credit
we're gonna
management
go there.
piece. But when I say don't do it if you don't already have it, I truly mean that. And it's coming from a place of I've been there, done that.
Yeah.
It's amazing.
And I just want to add
Yeah,
a
go
little
ahead.
bit of credence to that as well. You talking about 2,000 in debt in your 20s? I done been 25K in debt before
Wow.
trying to launch a business. And when I tell you, it is very stressful trying to make that minimum payment at that amount.
Absolutely.
As you just said, you have to budget for that as well as plan for the unexpected. Nobody ever thinks in their mind a year from now, I'm going to be doing just where I'm at or worse than where I am.
Right.
But planning for that downside or just being prepared with that savings or emergency or some type of way, man, it matters. It literally
Makes
matters.
sense.
You know, that was exactly where I was gonna go with it. I think of Murphy's Law, like anything that can go wrong will. And I think that that's the trap you set up for yourself when you get too comfortable with using credit for everything that you do. Is even when you're budgeting forward, you're like, oh yeah, I can afford this, but you're basing that off of if everything goes as planned.
Yeah.
And as we know, life never goes as planned.
Never,
More
ever.
times than not, there's going to be wrenches in that plan that are going to get thrown in there. There's going to be a wrinkle in it that's going to happen. And what happens is people will go right up to the limit, right? And be like, I'm perfect. I'll be good to go. And then you have a medical expense that pops up. Your mom asks you for some money. You have to go take this unexpected trip somewhere, or a bill comes earlier. That Apple bill hits at that worst part of the month.
Worst time.
So I think we have to be very careful because I think it builds bad habits. I think things like Afterpay and Klarna, because at least with a normal credit card, you know that payment is coming at the end of the month, and it's going to have interest attached to it. But when you're looking at it like, oh, I can just pay this off and it's no interest for the first however many months or years, this is perfect.
Yeah.
And it builds a habit. What ends up happening is you put that off. You don't prioritize that payment. You deprioritize that payment, and it builds up on you over time. And next thing you know, you're like, how do I have $1,000, $2,000, $3,000 on things that I don't even remember buying?
Exactly.
So we have to be careful with those habits. So I just wanted to get you guys' opinion on that. Okay. Question number 2. How does someone establish good credit, LaLover?
You can establish credit a couple of ways. Number one, you can become an authorized user. And if I'm not mistaken, I think you and I may have talked about that. Your parents can add you to their cards
Yeah.
as an authorized user, and that really will build your credit if their cards are in good standing.
Yeah.
Let me be clear. Good standing. Because we've all heard,
Yeah.
well, I had a water bill and I was 6 months old.
Right.
I'm not talking about that. I'm talking about financial responsibility with your cards, and it builds your credit. And I'm going to say 6 months or a little bit before you turn 17 or 18. That will really help you out.
I like that.
If you don't have that, then I would say get your first card, but be responsible because you have no credit if you don't have credit.
Yeah.
So you have to start somewhere.
I was just going to add to that point. You can add an authorized user like your child for certain places literally as soon as they get a social security card. So for some places you can go there, but most places is around 13 to 15 years old. For Discover, I know it's around 15 years old. That's when I added my little sister. Man, her score went crazy after that. So I completely agree with that.
But it's a cheat code because I remember the first time I applied for a credit card, I was 22. And I'm going in there thinking, okay, it says, I remember they said they really want to approve people with at least a 700 or 715 credit score. And I'm like, I don't even have credit, so I don't know how this is going to go. And they approved me super quick. And when I checked my Credit Karma, I downloaded Credit Karma, it said that I had 16 years of credit history. And I'm like, what are you talking about? I don't have any, I'm concerned. I'm like, what is going on right now? Because I have not had credit. I didn't even have student loans. So I'm sitting here like, where is this coming from? And then I'm checking it and I see the gas card that my parents have had me and my sister on for decades. So it helps so much because now whenever I went for a loan for a house, it looks like I have 19 years of credit history.
That's good.
Exactly.
Right? It looks really good. My credit score is extremely high, and I have a great rating when it comes to the length of my credit history because my parents put me on as an authorized user very young.
Shout out to Papa Harris, man.
Absolutely. Absolutely. Set me up for success. But I know a lot of people have the opposite experience, like you said, and they're dealing with circumstances where it's like, look, my mom had the TV bill in my name and wasn't paying it. And I'm sitting here with 500 credit score, 400 credit score just destroyed. And I don't even know why I have to deal with this.
Yeah.
So that can be a tough place.
That's good. That's good. All
Rex?
right. So question number 3. All right. What are some credit myths and misconceptions that you're tired of hearing?
Ooh.
I want you to go first on this one.
I know y'all have a lot.
You got a lot of you.
Credit cards are the devil. Credit cards are the enemy. Cut up the credit cards. That's number 1 for me.
Yeah.
Number 2, I don't know if you guys watch a lot of YouTube, but you'll see those people advertising saying you don't have to pay your credit on time. That is not true. You have to pay on time. Those are I'm just going to give those 2. Those are my biggest ones I absolutely loathe.
Can you dive into that second part? Like, you have to pay it on time. So what are they saying when they're saying you don't have to pay it on time?
So it'll like an infomercial, almost like, you ever hear you need a good credit score? You do, but you don't have to pay on time. That's a misnomer. And then you hear that, I'm like, that is not a misnomer. That is the truth.
Yeah.
You have to pay on time. It goes back to integrity, like I said. If I borrow $100 from you and I tell you I'm going to give it to you Friday, you're expecting it Friday.
Yeah.
I don't give it back to you for a year.
Yeah.
You probably told everybody you know, man, don't give LaLover money. She is not going to give it back to you. It's the same thing with the lenders.
Yeah.
Right? You can't then go back and borrow money when you really need it.
Yeah.
Or get more of it because you've already shot your integrity down.
That's good.
Man, 2 for me, one of them piggybacks off of what LaLover just said is you should throw away the credit cards, especially if you're not using them. Do not do that. That is the worst way to mess up your credit, actually. Go ahead and let them build up in the credit age and try to keep them open as long as possible. Because the longer you have that credit age, man, it's a game changer. The second one that I've been seeing on social media often, and it's crazy because I really look for this law and everything, it's that you don't have to pay debts that are older than 2 years if they've been in collections or in charge-off status.
What?
Right?
Yeah, that's not true.
I've seen it around.
Explain
I
that,
promise you.
man.
I'll just, okay, look. I don't know where this notion came from, but really they're doing it to advertise credit repair, which is like, hey, if you had a debt that's over 2 years old, it's best to not pay it. Some of that I kind of agree with because of basically like the statute of limitations and stuff like that. But as far as like you own a debt, you still owe it. Depending on your state, they still can sue you. Like if you live in Colorado, they have 15 years past the time to sue you back for that money that you owe them.
Wow.
So it's really like you really need to pay attention and don't be misled for real. But the reason why they say the 2 years is because if you pay it off after that 2 years, you're restarting the debt clock. Yeah.
I don't even know what that means. What do we mean
All
by
right, so
restarting the
I
debt clock?
apologize. Let me explain a bit further. So the debt clock is basically the 7-year time period from the date of last delinquency.
Okay.
So if the date of last delinquency was, let's say, last year, December, right? And you pay it now, or you pay a portion of it or anything, from that point on, the date of last delinquency starts again with today. And then it goes forward from there. Yeah.
Makes sense.
Got you. Okay, that makes sense. So what do you guys have to say to people that are spewing these myths, right? They continue to say these things. How do you guys feel about
Stop
that?
the madness.
Yeah, man, that's dangerous.
Stop. It's a lot of misinformation out there. First and foremost, I'm going to say, do your research. Study to show thyself approved. That's written in a real good book. It's called the Bible. And I'm not trying to get religious or spiritual, but
We can on here.
have to be accountable for our own actions. Learn, ask questions, do what we're doing right now. Have money conversations. Ask people that you know that have credit cards. Find out for yourself. Fact check everything. Everything. Even what I say today. Fact check it because you need to know firsthand for yourself.
Yeah.
I completely agree. Literally, we see it today in pop culture with Kendrick and
100%.
Drake.
Yeah.
100%. Like literally, no fact check, but the notion is out already.
Yeah.
Right? That is what's happening right now. So for those people, like, please, you got to stop with the power that you have, because people are running with this. And then after that, they get into trouble and being like, well, I thought it was this because I seen this. And it's like, no, it does not work that way. Always do your own research and talk to people that you know are in the industry.
That's good.
That's real. Look, the power of the tongue is mighty, right?
Absolutely.
And
Real.
people have to use their influence, and me and Rex talk about this often. You got to use your influence and your platform for good. And if you're not, you're really destroying a lot of people. You think you're just saying it to get attention or saying it to get publicity and more sales, but you're really harming people's lives. So that's something people need to think about.
One more thing on that, man. If you are a public figure, don't be afraid to say you was wrong about something or that something changed. That is something that I really wish people would do. There's a lot of things in the credit game, or I'm going to call it a credit game.
It is.
That they literally spew out, and that stuff is no longer true anymore. And they never come back and change it. They never say, hey, the bank changed the rules. It's more like, hey, you go find out when you find out.
Yeah.
Can I add a little bit to that?
For sure.
What really got me started with understanding and learning about credit? 18 years old, college campus, Texas A&M University. There were those plastic hard tables everywhere on campus. I got free T-shirts, free baseball caps, koozies, all kind of stuff that was important to an 18-year-old. I can't tell you today where any of that stuff is or why it was important to me then.
Yeah.
But guess who was signing on the dotted line here, there, everywhere?
Yeah.
Me. Up to almost, I think I had maybe between 31 and 33 credit cards.
Wow.
That's a lot of credit cards to have that young.
Oh my God.
Because I had access to it.
Yeah.
However, it worked for me.
That's crazy.
Because I paid the bills when they came. Remember, I told you, credit to me means integrity.
Yeah.
I've always had a fear of owing people money. So when the bills came, I paid them. That has now changed. I think it changed in 2010. Credit card companies cannot go camp out on college campuses anymore.
Really?
So that's different. So I can say that was my experience because that was the case back then, but that's not the case now. So to your point, when things change, make mention of it.
Yeah. Yeah, that's good.
That remind me of Regions at FIS. Open up that bank account. They literally send you through the carousel at the end. Regions Bank is right there.
Yeah.
Hey, you want to make sure you get a bank account. It's important. I can imagine them doing that with the credit cards for real. Yeah.
Offering free pizza.
Man.
All kinds of stuff.
That's crazy.
All right, next question. What hacks can a person use to build or rebuild their credit faster? So I know you guys have already mentioned authorized users.
Building first.
Okay. So I don't know if this is going to be what you want me to say, but
Go ahead.
I am a huge fan. Y'all see this bottle of water? Buy a bottle of water with your credit card and nothing else. And pay that bill before or on the due date.
Yeah.
I agree.
Explain that. Break that down for us.
Listen, just because you have a credit card doesn't mean you have to go to the limit. In fact, you absolutely should not go to the limit. I want you to just put small purchases on there and pay them on time. I want you to develop a habit of paying before the due date. That is going to boost your score. And naturally, the credit card companies are going to give you a larger limit. You don't even have to call and ask for it.
Yeah.
They're going to see you doing the right behavior.
Yeah.
And reward you for it. But you start small. If you're faithful over a
few things.
Hey, look, come on.
You'll become a ruler over many.
Yeah, come on.
I stand before you today. I have available probably $117,000 worth of credit.
Wow.
I may only be using $4,000.
Wow.
That's kind of talking about the credit utilization. I'm not saying that to brag. What I'm saying is I've been doing this, as you guys saw my report earlier today,
I can attest.
over 20 years.
I
I started out in one place and I ended up here. So I want to encourage people. It's not where you start.
Yeah.
It's where you end.
I like that. I love that a lot.
Hey, she inspired me. She inspired me right now. But what I will say, if you looking to rebuild your credit, the first thing to do is either get a secure card, right? A secure card. Yes. But what I love to tell my clients to do actually is to go to places like Ava or Kickoff that allow you to have a higher credit limit and not put that money down as like deposit, right?
Yeah.
But a great secured card is Discover. Capital One has some good ones as well. And then the second thing, man, is pay it on time. I agree with you completely. You have to pay on time. I think it's 30 or 35% of your credit like
Your
score
formula.
formula goes into your payment history. Take care of that.
Right.
Like,
So 2 questions to that.
Go ahead.
1, can you let them know what a secure card means?
Okay.
And 2, I've always heard you should pay your bill twice a month.
You can.
Okay.
I don't personally, but go ahead.
So I'll let you take the explanation of what a secure credit card is,
Okay,
and then
you
I'll
got
go
it.
through all 5 credit factors really
Okay.
quickly. How much they're weighted.
Let's get it.
You go first, because they need to know that first, and then I'll
Okay,
tell them what
so
I need to secure.
you are analyzed by 5 credit factors. Sometimes you'll see 6. I'll lump 2 of them together. I have 5 fingers. I have 5 toes. 5 resonates with me, so that's what I like.
Here we go.
First, payment history combined with derogatory remarks gives you a total of 35% of your credit score. What's the payment history? It's the history of how you've made your payments. Have you paid on time? Have you paid early? Are you 30 days past due, 45 days past due, 110 days past due? That would be a negative remark or derogatory remark. Then you have credit utilization. That is 30% of your score. What does that mean? It's a long word. It just means how much of your available credit are you utilizing? Then you have the age of your credit. You want to be old in this regard because the longer you've been using credit and having a good credit history, the better your score is going to be. And that's going to be 15%.
Okay.
The last 2 are 10% each. And that is the mixture of your credit and then inquiries. How varied is your credit? Do you have a secure card or a non-secure card? Do you have a revolving account? Do you have student loans? Do you have a mortgage, a car? How diverse is your credit profile, your credit mix? That lets the lenders know you're savvy. And then inquiries, we all know what those are. How many times you have your credit pulled? And then you have what's called soft and hard inquiries. And I won't go that deep into it, but that all together gives you 100% of your credit score.
I like that.
That's amazing.
So you have a score and you have a profile.
I'm glad you.
And they are husband and wife. They are Siamese twins. You can't separate them. The number is a 3-digit score that Fair Isaac Corporation came up with. That's where FICO comes from, and that is the standard. You have feel-good scores. They're called Vantage scores. That's Credit Karma, Wallet Hub, and other things like that. You want Experian, Equifax, and TransUnion to give you your scores.
Gotcha.
I just want to piggyback off of a few points, actually. The first point is with the Vantage score, guess who it's created by? It was created by Experian, Equifax, TransUnion, and Innovis, right? To give you a, as she said, feel-good score.
Yeah.
They use different stuff. The banks actually use the FICO score. They've been using it since 60 something. It's been a while.
A long time.
It's been a long time. That's number one. Number two is when it comes to getting that secured card, I just want to break it down a little bit. A secured card is where you put money into the bank and then they give you a credit card, but that money that you put in is actually the collateral, right? Because you don't have the credit worthiness just yet. So that collateral is used as a backing to like back you up, almost like a voucher for you. Like, hey, I got this just in case, right? Once you do make good payment history and show them that you're responsible with the credit, they typically either give you the money back or raise your limits past that amount. Discover usually does it within like 6 months.
So you're saying if I want to start building credit and I have no credit history, but let's say I have a little cash, I can go to the bank or to whatever credit card agency I want to go to and say, hey, I want to get a secure card for $1,000 and I have to put $1,000 down. They'll give me a credit limit of $1,000. That way I can now start using that credit, keep it within that utilization range, right? So that I can show that I'm paying it on time and that I'm responsible with the money. And over time, they will give me either unsecured cards or higher limits or give me my money back.
Basically, man.
Can I add a little bit to that, though?
Go ahead.
Okay, so with a secure card, there are fees that you may not necessarily have associated with a regular credit card.
Okay.
So you may put down $1,000, but you really may only have access to 800.
Gotcha. Because they're
on a
going to
monthly
take
basis.
some.
And I point that out because people don't realize, well, I may not have $1,000. I may only have $300.
Yeah.
You still don't have access to the full 300.
Yeah.
It may really be 200 or maybe 175.
Mm-hmm.
She
That's a
right
good
about
point.
that. You got to find the right cards.
Find the right cards and make sure you read the terms and conditions. Read the disclosures.
Yeah.
Yes.
I know it's not sexy reading, y'all. It is mind numbing at times, but I am the person with a highlighter and a pen, and I'm going line by line, and I'm reading the terms and conditions.
I disagree.
Because I wanna know what I'm getting
actually
into.
made it so much easier to read it. They put it in the boxes. They bold out your APR and everything else now. And some of the terms.
I'm talking about the whole thing. It's three or so pages long.
Yeah, you going crazy.
Because I want to know. Because it's a
I
contract.
understand. No, that is
So
true.
I want to know,
That
what
is
are
very
you
true.
actually holding me accountable to and for?
That's a good point.
That is a good point.
Next question. Rex, you got the next one?
Yeah. Well, I want to say something to the variant when it comes to having different things in your account. In 2017, I went to go to the bank to get my first car. Now, I've been with a credit union for a really long time, but I've only had I had a TJ Maxx Rewards card, and I had a furniture store card, and that was really it. So when I went, I said, "Hey, so this is card one. It's 15,000." They was like, "Well, Mr. Howard, you don't have bad credit, but you've never bought a car before." So there's no history that you had a big loan before. There's so we're only trusting you because the guy that sent you is our good friend. So I was actually able to get a car loan for 15,000 simply because of a connection I had. But if it wasn't for that connection, my history wasn't long enough or extensive enough to get it on my own.
I'll speak toward this a little bit.
Absolutely.
I was gonna say, first thing is, it is good to build those connections at a bank or a credit union. Building those connections, man, they open some doors.
Yes, they do.
They do, seriously. The second thing is, usually that happens because your credit mix. You had two revolving lines of credit, but no installment credit. That's what they were saying. Go ahead. I'm gonna let you add on to that.
So I'm gonna add to this. I am team having credit unions
I was about to ask this.
and banks.
Yeah.
Preach it.
But again, husband and wife team, right? They have their own place
Yeah.
to add to your full financial portfolio, and having a diverse option is the best way to go for me, and in my opinion. The other thing I was going to add is I want us to all understand we don't have just one credit score. We have several. You have one score from Experian, you have one score from Equifax, you have one score from TransUnion. And in addition to that, you have a car buying credit score, a home buying credit score. What else?
You got the credit, you got the bank score as well, your FICO
A
bank
beacon
score.
score.
Yep.
So if you're wanting to get something, you have to understand, just because you pull your report on Experian, Equifax, or TransUnion, that may not be the exact same score the banks or the lenders are going to have for you.
Yeah. And pay attention. If you do get denied, they have the obligation to give you your FICO score, the score that they pulled. Yep, and where they pulled it from.
So typically when they deny you, they'll say, you will receive something in the mail that lets you know why.
That
gives you the breakdown.
Yep.
Okay.
Go on and pay attention to that.
Okay.
That's very important.
I hear from a lot of people, especially when they're going to get loans for cars or anything of sorts, that a relationship with a credit union, you typically are going to get a better outcome from them than maybe big bank financing you or somewhere else. What's the benefit of a credit union when it comes to getting a loan versus maybe a bank or some other financing?
I'll leave this one.
Of course.
So with a credit union, you have a one-on-one relationship. They're really going to hold your hand where you are. They're going to meet you where you are and ask you what are your goals and walk you to get there.
Okay.
Bigger banks, and this is my personal experience and experience I know of family members and friends, they're not going to do that.
Yeah.
Banks are for profit. Credit unions are not for profit. Credit unions have to make a profit, but the profit that they make goes back into the low interest rates, products and services that they can offer you.
Gotcha.
When you are a member of a credit union, you're a member owner. So you have some say. Every year you have an annual meeting. You go to that meeting and you voice your opinion. You vote. You can't do that going to these big banks. You have zero say.
Yeah.
Zero control, zero power.
Unless you
I like
Jamie
that.
Dimon.
Yeah. You're the big guys on Wall Street. Then it might be a little different. All right, we're gonna go into a little bit of rapid fire for these next questions. So I'm gonna ask you guys questions. Me and Rex are gonna go back and forth, and we just want you guys to give simple, quick answers. And then if we want to debate them a little bit, we can. But we want to see. All right. So first question I have: how many credit cards should a person have? Less than 5, more than 5?
I'm going to say less than 5.
It depends on your age. I actually think you should have as many open lines as possible.
So why do you guys feel that way? This sounds like one we need to talk about.
Okay, so again, I told you how many I had at a very young age, and I have way more than 5 credit cards right now. But it depends on how responsible you are and what can you manage. If you don't have enough money to warrant 10, 15 credit cards, I'm going to say the magic number is 4.
I like that.
I like where she's coming from. For me, it's more of a credit profile optimization, right? So if you have a lot of credit cards reporting and you're doing a great job with a lot, as she just said, if you're blessed with a little and you take care of it, you'll be blessed with a lot.
That makes sense.
Okay, Rex.
All right. When should I close a credit card?
Never.
Never, ever, ever.
Okay, so we're both on this. Y'all are on the same page on this.
So all right. Let's just say you go get a credit card through a store, right? Or a jewelry store, just wherever. Never close those either.
No.
Nope.
Even if they have really high interest rates.
What did I tell y'all earlier?
Even if you never using it.
You want to be old. The age of the credit, right? So if that was your very first card and you got it 10 years ago,
keep that.
You get a new card today. It's an average.
Yeah.
You don't have a 1-year-old card and a 10-year-old. It's the average.
Okay.
Never close an account unless you absolutely have to. And I mean, you are financially snowed under.
That makes sense. That's what I was going to ask is if it's not my oldest card, right? And I have a card that's 10 years old and this card may only be 3 years old. Interest rates are too high on it. It's just doing me under. I still shouldn't get rid of it because the average is then going to go. Well, what would happen? Would the average be higher or would it be lower if I get rid of this card?
So if the card is 1 year old and you've got a 10-year-old and you close a 1-year-old.
What do you have? 5 years probably?
Actually, it's gonna, if you only have those 2 cards, then it's just going to be the average of that other card, which is 10.
Yeah, exactly.
But I'll tell you why I say don't close it. Number 1, the mixture, the variety. Number 2, it doesn't matter what the interest rates are. We are zeroing out the credit card balance every month anyway.
So the interest is not even.
I don't care what, and I have really good credit. I showed you guys my credit reports. So I'm at the top tier.
Yeah.
I never look at the interest rates.
Yeah.
I don't care.
Yeah.
I'm not paying you interest. Interest is the devil if you ask me.
I like that.
Why would I spend $100 and then end up over time paying you back $300? Make the math ain't mathing.
Yeah.
I'm not doing that.
I've been anxious to jump in, okay? So something they don't tell you is that FICO actually takes into account open versus closed accounts as well. Your closed accounts are actually not as much factored into your credit age as you think. So as soon as you close out that account, that credit age you thought was this long becomes this long.
Yeah, I literally just closed out my car account. I paid it off after 7 years.
You should talk to us, man.
Did you say car, C-A-R or C-A-R-D?
Car.
Okay.
Oh, car is cool.
Vehicle, yeah.
Car is cool. Yeah.
Which is another reason we say variety of accounts, right? By design, any loan is going to close. It has a start date and an end date.
Yeah.
There's nothing you can do
That's
about
supposed to
that.
happen.
That's going to naturally happen.
Yep.
But with the credit cards, that's what really gives you lift on the credit report.
Okay, I see what you mean.
You understand what I'm
So
saying?
you guys aren't saying don't pay off your loans, right? You got a mortgage, you have cards, you have anything like that you bought an item with from somebody else. You're paying that back. You need to pay all that back.
Absolutely.
But credit cards where people are giving you money,
It's revolving.
that you need to keep that open.
Because that one, you have to be more responsible. That's actually what the credit bureaus look at the most.
The most.
This really is a game.
Yeah.
Yes.
Yeah, this is all a game. So the installment loan, that's what you're talking about. Those are installment loans.
Gotcha.
She said they have a beginning date and an end date. That is true. They just want to make sure you're paying on time.
I like
With the
that.
revolving credit, it's almost like they putting candy out in front of you and saying, hey, are you going to take it and be responsible with it?
Yeah.
If you not, they take it back. And if you are, they go give you more candy.
I like that.
Yeah.
Rex, can you do the next question? We already talked about secured cards, so can you do the following one?
Yeah, so how early can a person start to establish credit?
As we,
He actually said that earlier.
Really?
As soon as you have a Social Security card, if you have a responsible parent.
And I'll name some banks for y'all just in case. So actually credit unions, Pentagon, Federal Credit Union, Navy Fed, and there are other banks as well that as soon as they have that Social Security number, you can put them right on and they can literally grow their age all the way up until they're 18.
I love that. Yeah. All right, next question. This is going to be our last big one before we move into our Let's Talk letter. So if you had one tip to leave with our listeners, what would it be? How would you really, if you got to walk out of here and they could get nothing else out of this episode and you could talk to them right now, I want each of you, when you give this message, to look right in your camera and tell them one tip that's really going to stay with them along their credit journey. What would it be?
You want me to go first?
You can, yeah.
Talk about money. I grew up in a household and we didn't really discuss money. Talk about money. I don't care what topic, talk about it. You're going to learn stuff you didn't know. You're going to be reminded of stuff that you already knew. You're going to find out some things that you did well. You're going to find out some things you didn't do well. And then you're going to find some steps that you need to take to get yourself from where you are to where you want to be. Talk about it. Talk about it with people who's doing well with money and people who are not doing well, so you can learn from both.
That's good.
That is good.
That's good.
I'm gonna cheat a little bit. Is that okay?
Absolutely.
All right, cool. So I'm gonna actually give two. The one of them is gonna be a practical tip, and one of them will be an informative tip. I completely agree. Talking about money, but also being a student at all times. In every aspect of your life, you have to be a student. If you're constantly learning, that is the best way to grow as a person.
That's good.
Right? The second thing, practical tip, stop calling the debt, consolidation companies if you get into a snowball. They are literally charging you a fee to take your money and then just have a simple conversation that you can have with the same banks. And the same banks will not probably close your cards out like they will do if you go through them. So you're paying more in the long run, even though they're saying they're saving you money. And on top of that, it stays on your credit report. All it's going to be is a paid charge off or a paid collection. Whereas instead, that's when you should come to people like me to get it removed from your credit report, but you still should pay your debts.
Right. Yeah. And that's actually something I wanted to ask because I'm not sure if we covered it. You guys do two different things. Can you guys tell the listeners at what point should they come see you and a general step or breakdown of what you're going to give them?
I like to work with people one-on-one. I consider myself a credit educationalist. I want to teach you before you need repair. I want to give you the rules to the game, if you will.
Right.
Before you have to go back and fix something that you messed up. And I'll give you a quick example. I'm not a big sports person, but I know enough to know I'm not getting ready to go to a basketball competition with a tennis racket in my hand.
Yeah.
My job is to make sure you have the right tools and the right equipment to play the right game.
I love that.
That's good.
And if you do come with the tennis racket,
Yeah.
that's when you call me. You know what I mean? I can get you right back on the right path. If you do have mistakes on your credit, and then we start the educational process and building it again.
Okay, so at what point does somebody need to be financially to come speak with you guys?
Man, at any point, honestly, I would say for her, you should actually have your children talk to her. As she said, this is a family conversation. The old financial education starts at the home, right? So the younger that they are, and you get them in front of those conversations, you educating them, you telling them about credit, what mistakes you've made, as well as what good things you have done, they will know better and be able to make those better decisions.
Experts say you should start talking to children about money between ages 4 and 5. I am a certified financial counselor. I will talk to you about budgeting, investing, spending plans, debt, credit. It doesn't really matter. You can come talk to me at any time and at any point. And if I have to call on resources, don't think I won't, because I am.
Right. I love that. So one thing that we did say we're going to cover, but I don't think we covered, if somebody's high in debt and they're trying to pay down their debt, what are some I know there's methodology out there, right? You mentioned snowball method, maybe another one. What are some strategies that people can use? Because I know there's going to be people listening like, look, I need this right now. I'm trying to figure out how to pay down my debt. What steps should they take?
I'm gonna let you take this one because
Okay.
you actually mentioned two of them earlier, and they were very insightful.
Okay, so for me, you have to write down all your debts,
Mm-hmm.
the dollar amount that you owe, and then right beside that, I want you to write down the interest.
Mm-hmm.
I am a huge fan. Pay whichever one has the highest interest first,
Mm-hmm.
because that's where you're spending the most money.
Mm-hmm.
It's costing you the most. Once you figure out the order, attack it with everything you got. I don't care if you can only pay an extra $5. Everything that you can put towards that debt, knock it down. Once that is gone, I want you to take the minimum payments that you were making or all the money you were making for that one and apply it to the next one.
Yep.
And then knock it out, knock it out, knock it out. And you keep doing the same thing until all of your debt is gone. You might be saying, well, lover, I don't have enough money now. That's why I'm where I am. Okay, so we're going to figure some things out. What are you going to cut?
Some got to get
You're
cut.
either going to cut something or you're going to get in some additional income.
Mm-hmm.
Otherwise, we don't even need to have a conversation because you're not really ready
Mm-hmm.
to eliminate the debt.
Mm-hmm. What are you willing to sacrifice? That's a conversation.
It is, man. It is. I just want to piggyback off of that. I was 25K in debt, right?
Okay.
Wow.
Trying to launch a business. I literally been in the finance and banking industry. I'm working a pretty decent job. Like I'm making around 6 figures. When I tell you, I had to get a part-time job as a security guard
Wow.
to pay that down. So I know what you mean. When you say give it everything you got, I gave it everything I had to get that debt down. And I did the waterfall method. I think that's what that's called.
Well, you have the debt snowball and the avalanche, but
Yeah.
I combined them actually.
Oh, okay.
That's exactly what I did.
All
So
right.
one is you pay off the smallest debt first.
That's
That's
the
a
one I did.
snowball, and that's to get a win, and that's the psychology behind it. I gave you what I did, my method, because when I got that largest monkey off my back,
Yeah.
I was like, oh, thank you, Jesus.
Yeah.
And I needed that.
Yeah.
I didn't need a small win. I needed the big burden
Yeah.
so I could kind of stand up, put my shoulders back, and smile again.
I
So
like that.
it was a combination of both.
And I will say, once you get to about the 40% mark, 50% mark, there are some good debt consolidation loans out there, right?
Mhm.
If you got over a 700 or a 680 or even a 650 sometimes, but you have strong income, you can get a place like Credit Strong, Best Egg, Avant. They will give you that loan. They might deny you first. I'm not gonna lie. They love to deny and then come back and be like, wait, we looked at your application again, and then they offer that to you. You pay down them cards, and now it's just a flat rate. And it's easier for you to pay that off then. But as she said, that APR will kill you if you don't know what you're paying.
That's
Now,
good.
I did something like that for myself. I had a foundation loan on my property, and it was $10,000, and I did not want to spend that $10,000 right then and there. And this was a good thing because I had been in the financial just space, just learning things long enough to where I understood money enough to know how to play it. And so what I ended up doing was they were offering, the company that was going to do it had their own financing, and they were offering, you only had to put, I think, like 15% down for the total repair. And then the rest you had a year to pay off with deferred interest. So you didn't have any interest to pay. You had a year to pay it off. But if you didn't pay it off by the time that year was up, all of it was going to accrue. And it was going to be like an additional $3,000 or $4,000 on that loan because it was really high on the interest. So I knew that I needed that money, on that cash on hand, for other investments at that time that were going to yield me a greater return than what I would have been paying on those payments. And so what I did was I spent those next few months. I paid as much towards those investments as I wanted to and what I needed to. And when it came time for that loan to be due, I went to a consolidation method. I went and I found a cheaper loan to pay it. And so I had put like a couple thousand up, got a $6,500 loan for the $6,500 that was remaining. But the interest on that was like 8% versus the interest on the other one was like, I want to say it was somewhere like 18 to 22%.
Wow.
And so I just used that loan, that $6,500 loan, to pay that person off, and then I made the payments on the other one at a higher rate. And I paid, like, minimum was maybe $120 a month, but I paid $600 a month, paid it off in 6 months, got it for cheaper.
So what I heard you say was a couple things. Number one, you were a good steward.
Yeah.
You had a plan.
Yeah.
You did some research.
Yeah.
You implemented the plan.
There you go.
That's good.
That's it.
That's amazing.
Bars.
Bars, man. Drop that mic.
So I want to ask one more question on my end. How does it feel to be Black in this industry?
Man, so To be honest with you, credit repair has now been popularized, right? We look at it a little bit differently. I will say, when you said you had over 100K in lines available, I recently did the exact same thing, but on my personal and business side.
That's dope. Yeah.
So I will say, like, having that availability is awesome. People look to that as aspirational, so that's great, but it does come with a lot of responsibility.
It does.
I love it because it's like, as you said, integrity matters. And for me, if I'm not doing right by you, then my impact that I started to do this for is gone right away, right? That's just how I feel. Go ahead.
I agree. It's both a blessing and a curse. Because sometimes people come to you and they think, hey, you have it.
On me.
Yeah.
You have it.
Yeah.
You can cover this.
Yeah.
You should pay for this.
Mm-hmm.
Yes, no. Being a good steward.
Yeah.
And just because I have it now doesn't mean I can squander it away or I won't have it.
Yeah.
So it comes with a lot of weight, a lot of responsibility.
I feel like no is such an important thing.
It is.
As you grow in your success, no might need to become your favorite word.
Yeah.
Oh, man.
So,
Rex, I feel like you was about to say something.
No, yeah, you know, I hate to say I have one more question because I always have another question.
You good.
So the question is, how do you build up that financial discipline to know that you have access to this amount of money and to know that I don't need to spend it, right? Because typically what happens, right, if you take somebody that wins a lottery, you never had that much money before you win the lottery. Let's say it's 25,000. You now have 25,000 that you didn't have to work for, right? That person is going to go and blow it. I've seen it.
We all have seen it. The PPP loan was the perfect example.
Right.
To be honest
Talk
with
about
you.
it.
So, but what I will say is have a plan.
Have
a plan. I think that's the most important thing. And then don't go in a form of desperation, right? So when you get in those lines of credit, you're not going without a plan, number one, and you're not going when you need it.
That's good.
Because when you need it, they don't want to give it. But when you don't need it, they go, here you go.
Yeah.
Right? So then when you're ready to execute it, then you execute. That's for me.
My response to that is my vision. I have a financial vision for my life.
That's good.
I know that in my senior years or golden years, I want to be financially secure.
100%.
I am 100% single.
Yeah.
No children.
Yeah.
I'm not married. So everything that I do is 100% financed by me.
Yeah.
So I had to put a plan together in place to say, here's where I am. Here's where I want to be. How do I get there? What does that look like for me?
Absolutely.
And part of that is having available credit when I need it, if I need it, and leveraging it.
Yeah.
Not having to have it to fill up the gap because I
Absolutely.
don't have enough.
That's good.
And also understand that there are different products for different things. And you need to know your benefits. Read them disclosures, as she said, because those matter a lot.
That's good.
I got a story to tell with Lamarr. One thing Lamarr is quick to do when we go out and we're kicking it, they just put it on my card. Y'all send me y'all portion. Put it on my card. And I know what Lamarr be doing. Lamarr wants them points. Lamarr wants the points. Anytime he goes out, he's like, bro, why don't you just use your credit card for that? And I'm sitting there like, I'm starting to get it. Like, you know what? I probably do just need to do that because I'm going to spend cash to pay for this anyway.
You are.
So why not put it on the credit card so you get the benefit of the points and rewards and pay it off immediately? But I will caution people, do not go down that route if you know when you pay with your credit card, you're going to sit there the next morning and be like, that bill can wait. I'm not worried about it, because then you're going to end up in the space where it's going to hurt you more than it's going to help you.
I'm going to add a little bit to that story.
Yeah.
Every time I do that, after y'all send me the money, I deposit it to my bank and then I pay the card right away.
Right then.
Right then and
I'm
there.
already knowing. I'm already
Right then
knowing.
and there, I'll be like, okay, this taken care of. But
You
I
have
get
to
the
be
points though.
very disciplined.
That's good.
Very disciplined. And you guys made a great point talking about, to Rex's question, like, how do you not mess this up? I mean, you have to have a vision.
Yeah.
People, what the Bible says, without a vision, our people perish, right?
100%.
So your future, your goals will perish if you don't have a vision for them. And so it really is important for you to know before you go into the next phase of your life, the next financial journey of your life, what's the end goal? Start with the end in mind, and then ask yourself along the journey, is the decision and the step I'm about to take going to take me closer to that goal or further away? And if it whatever the answer is, that determines yes or no.
Absolutely.
So I love that.
I want to add one more piece to using credit cards.
Mm-hmm.
Credit cards give you protections that debit cards do not.
Mm-hmm.
Debit cards can be hacked and it will snatch and grab all the money in your account. Credit cards cannot. If you steal from Discover, I guarantee you they coming after you with a vengeance. You understand?
They gonna get there.
So credit card gives you a lot of benefits and features. It's nothing to be afraid of. You just have to educate yourself, do a little bit of reading, and then take the first step. Apply what you've read.
And I take that a step further. They give you extra incentives. So I got the Platinum Express. You use that with the rental car, you get rental protection benefits like
automatically
roadside assistance.
Wow.
They do insurance as well, all of it. And it's like people don't look at that, but man, that stuff matter, man. It saves me some money.
It saves you money on a monthly basis.
Yeah.
All right, guys. So I think that's it for our main topic. Now we're going to move into our final segment of the show, which is our Let's Talk letter. So this is a segment where we take conversations and questions that have been sent in throughout the week or that we've had personally, and we ask everybody on the show their opinion. So with this being a part of our financial bootcamp series, I'm going to try and keep it there, but we love to talk about relationships. So we're going to have this conversation. Okay. So I got a brother who's struggling with a dilemma with his girlfriend right now. He's promised that they're going to go on this trip. Trip is going to cost him a few $1,000s. He doesn't have the money to pay for it right now. And he's really contemplating using credit to go ahead and pay for the trip. The question that he has is, should he still go on the trip, even though he doesn't necessarily have the cash in the bank? He does have the credit for it, but he doesn't have the cash in the bank right now. Should he still go on the trip so he doesn't disappoint her? Should he drop his girlfriend because she seems to not get the point when he tries to explain his financial situation? Yeah. Or should he try and do some mix of the two? What should he do at this point?
You want me to go first?
I'm going to let you go first. I'm going to let you handle that because I might be a little confrontational.
Take a deep breath, my sister, my dear sister. If you really care about that man, you're not asking him to spend money he doesn't have. I'm also going to say, are you helping out? Because y'all are not married. It makes a difference when you can add to the pot.
Yeah. Yeah.
If it does not align with their relationship goals and financial goals, it's a no. You don't have the money.
Yeah.
I swipe my card because I know I can zero out the balance in full.
Yeah.
So if I say, yeah, go ahead and go on the trip, then I'm contradicting what I've said this whole hour.
Yeah. That's real. You can't afford it, so you shouldn't do it, is what you're saying.
Do something local.
Yeah.
Have a location.
I was just going to say, there are alternatives that you can choose for that, but in reality, this all come down to honest conversation and understanding. Do you have an understanding with your partner, right? And also, does she understand where you want to go financially?
That's good.
Because to be honest with you, you can be well off, but still be in a position where you're saying, hey, this is not my season for vacations.
Yeah.
This is my season for growth. And in that season, you have to be able to tell them like, hey, this is what I'm looking to do. And if they believe in your vision and they also want to see you succeed and love you for it, that's all that's going to matter. And we can flip this the other way too. This ain't just a male thing. This is a female thing as well because that focus matters.
That's good.
That focus matters.
I've been there. I know, look, Rex, you might have been there too.
Yeah.
Where it's like, you made this promise, you're looking forward to doing it, and then when it's time to pay for that promise, you're like, this is going to take everything out of me to do it. And I remember when I went through that circumstance, I had told my girl we were going to go on a cruise. This was about 3 years ago. And I kept putting it off. And quite honestly, had I just put the money to the side each month, I would have had it. But I was worried about other things. And I wasn't communicating. And see, this is where I'll give her the credit, is because she was very upset with me, not because we didn't go on the trip. Of course, she was disappointed because we didn't go on the trip, but she was more so disappointed because she's like, you could have just told me what was going on, and my expectations wouldn't have been so high, and I wouldn't have been so excited for it. I would have known, like, okay, this isn't something we can do right now. But I never knew how to deal with not coming up with my end, right? I'm used to saying, oh, this is what we're going to do, and I'm going to do it. But there's going to come a time in life where you might not be able to do it, and you have to be able to be vulnerable and communicate that to your partner.
Right. Or your partner might be like, you know what, I got both of us this time.
That's real.
Exactly.
That's definitely real.
Keep doing what you're doing.
That's good. All right, now, so we're going to move into our sponsorships. And where people can find you. So let's start with that first, guys. Tell everybody where they can find you if they want to work with you, ways they can connect with you.
You can find me on Facebook. I'm on Instagram. LaLover Horace, LaLov as in Victor, ER. Both L's are capital.
Yes, ma'am.
All right. I've been working on this, so I'm gonna try my best. You can follow me and find me at Lamarr Nash on Facebook, Lamarr X Nash on Instagram. It's LAMA, 2 R's. It's a double R. X Nash, NASH. You can also visit iiyconsulting.com if you want to book a consultation.
Amazing. Rex, what about your sponsorships?
No, absolutely. So once I want to say I appreciate everybody. We appreciate everybody for tuning in, for following, for sharing, for liking, for subscribing. We made a post the other day, last week, that we hit 7.5 followers across all of our platforms.
7.5 thousand.
We've grown 3,000 to 5,000 since then.
It's crazy.
So
y'all killing it.
Yeah, so we definitely appreciate everybody for that. Continue to follow us at Let's Talk Like Men podcast on all platforms. What do you got? YouTube, we got Instagram, we got TikTok, we got Facebook. So follow us on all platforms, and then go to Rex Howard Jr. on Amazon and get your journals, the 29-day self-discovery journal and Until Tomorrow journal. And for the guests, we always make sure we bring a gift. This is gonna be
this is my second one. You feel me?
So
thank you.
Absolutely. So we wanted to always show love to our guests. That's my product, and that's also Myles' product. So that's all I have to say.
Absolutely.
Show the product.
Absolutely. So guys, yes, like we said, thank you everyone who's been subscribing, following, watching. This is amazing. The growth we're seeing is unprecedented, and exceeding even our expectations, but it isn't exceeding God's expectations. He knew what he had planned. So we're just going to keep doing what we're doing. We thank you all so much. And you can find me at www.milesthemillennial.com. You can book me for any speaking consultations that you need. You need young adults that need guidance. They need focus. I'm your motivational speaker that can come in and provide the education that they need. Also, when it comes to finding me on all platforms, Myles the Millennial, you can just search that up. I'll pop up on all your pages. Other than that, guys, this has been amazing, and we thank you all so much. Peace.
Thank y'all.